The shutdown is over, but the effects are still being felt. The weeks-long budget impasse brought a blackout on economic data. As prices remain high, many are waiting to see if the Federal Reserve will support another rate cut in December. Joining us now is Dr. Michael Busler. He is a finance professor at Stockton University. So first, let's begin. What's the state of the economy right now?
Well, because of the government shutdown, we didn't get a lot of data. So, in fact, we didn't get any data. We don't know what the growth rate was for GDP in the third quarter of last year. I suspect the inflation rate is starting to come down, mostly because energy prices are coming down. President Trump's drill baby drill policy has increased oil production in the U.S. to record high levels. In addition to that, OPEC, starting in September, has agreed to increase their output. So we should see much lower energy prices. I bought gasoline the other day. I live in New Jersey, obviously. I bought gas the other day, and the price was down to $2.85 a gallon. President Trump thinks he'll have oil prices down under $55 a barrel by the end of the year, and gasoline prices down to about $2.50 a gallon.
Well, lower gas prices will certainly be welcome for people who will be traveling for the holiday season. Now, the White House is also saying that they want to reduce tariffs in order to help lower prices for American consumers. From your perspective, how much of an impact could tariff cuts have on affordability, and how quickly would households see that?
So although the consumer price index is about the same as what it was when Trump entered office back in January, and I believe is heading downward because of energy, some products that have been tariffed, that have tariffs now, see rising prices. Some of those are food, beef, coffee, a lot of fruit, which comes primarily from South America. So President Trump said, I don't want to have any burdens on the American people, certainly not on the middle or the lower classes. So he relaxed the tariffs immediately on those food products. And we should start to see lower grocery prices really within the next couple of weeks.
We've seen markets continue to swing sharply in recent weeks. What do you see as the main forces behind this volatility? Economic fundamentals, geopolitical risks, or investor uncertainty about future policy?
So overall, what an investor is willing to pay for a share of stock depends on that investor's view of what the profitability of that company will be going forward. The reason, with the exception of last week or two, the reason the stock market has done so well is the business community is very optimistic about the economy going forward. Regulations have been cut, so it's easier for them to expand their businesses. Interest rates are falling and will likely to continue to fall into next year. That makes things much easier on them. In addition to that, there's a lot of foreign investment, trillions of dollars of foreign investment that have been attracted into the U.S. through President Trump's negotiations.
A lot of moving parts. We'll continue to follow all of it. Dr. Michael Busler, finance professor at Stockton University. Thank you so much for your insights today.
Thank you for having me, Veronica.